In August alone, another 1.2 million cars jostled for space on China's roads, a 55% year-on-year increase. The same month, new property sales were up 9.3% on 2009, while in Shanghai, cargo throughput hit new records, with the port handling 2.6 million containers. Premium income in the first half of 2010 topped $18 billion, up over 33% on 2009. And there's plenty of room for growth, as market penetration is still under 3% of GDP. Of the country's 115 insurance players, over 40 are foreign-owned or foreign-funded. Most entered the market in the 5 years after China joined the WTO. For Jackson Tang, who heads Liberty Mutual's operation here, this nation represents a vital engine for growth.
You know, China is now the 6th largest insurance market in the world. And China economy has just overtaken Japan as the 2nd largest world economy. So by that, the huge market has so much attraction, while other insurance markets in the world are almost saturated. Where do you grow your business as an international insurance group?
But foreign insurers face regulatory barriers, slow licensing procedures and limitations on business scope that don't apply to domestic firms that include Ping An and now the world's biggest life insurance group, China Life. As the European Union bemoans, foreign providers here may be growing, but their ambitions in China's marketplace are stifled.
When you are starting from a very low base, you are expected to grow much more than the average of the market. If the average of the market is 30% growth per year, foreign firms with a very tiny market share should grow much more. This is not the case.
And the market share for foreign life insurance companies has even waned since 2007 to under 5%, while foreign non-life property and casualty firms can't break the 2% ceiling. For Liberty Insurance, a non-life business that mainly writes auto cover, it took 6 years from opening its Chongqing head office to secure approval for 2 other branches, first here in Beijing and recently in Hangzhou.
That really slows down the development of any insurance company. And give you an example, a local insurance company can apply for 10, 15, 20 provincial new branches after they open up. But it would take an average of about 18 months to have 1 branch.
So while Jackson Tang believes China is the place to be, to increase his footprint in this market, he's got his work cut out. And especially because he's faced with another barrier to business that's actually written into China's WTO agreement, a prohibition on foreigners selling compulsory insurance products.
We cannot write the auto mandatory third-party liability insurance. That means if we write an auto customer, we could only provide physical damage.
So to sell the non-mandatory, fully comprehensive insurance element, he must compete with domestic companies that can provide total cover. With 70% of non-life business auto insurance, both the EU and the US want the WTO deal changed. And there's more. Foreign life insurance companies must have a local partner and cannot hold a majority stake in the joint venture. Plus, only one partnership is permitted, which is a big problem if relations sour.
If you pick up the wrong partner at the beginning, then you have only one solution, which is divorce and then look for another one. You cannot just kind of supplement that partnership with another one which you hope will be better.
With only a handful of foreign players making profits, some are now rethinking their China strategies and retreating from the market. Faced with barriers, strong domestic competitors, and now the growing number of banks licensed as insurers, foreign companies are lobbying for a more relaxed and transparent regulatory environment. In the meantime, it's down to sound marketing and getting a name for delivering better service. For Liberty Insurance, this means having McDonald's-style drive-ins where small claims of up to $150 are paid out in cash with no argument. The firm also offers accident-free customers complimentary rides to the airport or even home from the bar if they've had too much to drink. Of Chongqing's 18 non-life companies, it's now the 4th largest by premium income. The company also provides safety training to clients and government departments, which strengthens the Liberty Mutual brand in China. And of course, if policyholders heed the message and claim less, it's good for them and good for business.
It's part of our brand awareness. But most importantly, it's what Liberty Mutual does. When we enter markets, particularly international markets, we enter with safety.
Which in terms of market opening is how China entered the WTO. Back in 2001, Western politicians argued that while the EU and US markets would need to open up for Chinese goods, the Chinese market would open up for foreign services. 9 years on, this was clearly wishful thinking.